following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and that rockin' theme means it's time once again for the old Option Block, your bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as the old Options Insider Radio Network. And joining me on the old all-star panel today, starting off, beaming in all the way from St. Charles, Illinois, none other than Uncle Mike Tusaw from Know Your Options Inc. Uncle Mike, welcome to the show, sir.
Good to be here as always.
Yes, and I know you're doubly excited because we have a little guest coming on, and a little bit later, the surprise return of the old interview block. We snuck one in there for you listeners. I know you've been asking for one again for a while. We're bringing on Price Headley. He's going to be doing the KYO webinar train tomorrow, but before he stops there, he rolls into our station to chat about what he's going to be chatting about tomorrow, as well as some of the other interesting things on tap over there at Big Trend. So we'll be getting to that in just a few minutes, but also joining us on the old all-star panel today, the man from the land of corn, a.k.a. the Options Express hot seat, none other than Mr. John Grigus himself. John, welcome back to the program, sir.
Good to be here as well. Yeah, good to hear the interview block back as well. We have Price Headley's Big Trends actually in our auto trading department, so it'll be good to hear what he has to say about the future of his subscription service.
All right, so with the team assembled, we will dive right into the trading block.
The Trading Block.
And here we are in the old trading block, and we are joined better late than never by good old Mark Sebastian from OptionPit.com. Mr. Sebas, how are things in the land of the pit?
Well, it's a lot better if you don't own Apple. Tell you that much.
Way to take some shots right off the bat at good old Uncle Mike.
Wow. That wasn't aimed at Uncle Mike. That was aimed at every college protester that hates Nike but loves Apple.
Well, maybe we'll start there then. I was going to hit a rundown of the major indices, but since Apple is kind of the news du jour, we'll start there.
There was nothing going on today. There's nothing to report.
Apple.
It was
all right. Let's go home.
Everything's
All
flat,
done.
but Apple sucks. That's basically what happened.
Yeah, Apple taking a bit of a whooping today, down about 2.25% or over 14 handles to 638. So that brings up the obvious question for you, Uncle Mike. I know you were toying with the idea of finally getting out if they would let you up at the 690 strike. Looks like unless things turn around, that's not happening anytime soon. So what's the plan now? Are you rolling down from 690? Are you doubling down here? Going to blast out some 600 puts? What's the plan here going forward?
Well, I think now that it's down, I think what I need to do is double my exposure to it. What do you guys think?
I think that makes total sense.
Just Just kidding.
If you liked it at 670, you're gonna love it for 630.
Love it even more at 520, right?
Right.
So no, what I'm doing right now is we're still hedged from 620 on down for October. So for the meantime, I'm not obviously prefer it not to go down any further, but hey, if it does, we've been in it for a long time, and we're just gonna let the options take their course, so to speak. Earlier today, I rolled down the October 690s to the weekly 670s. I think it was for like a debit of like 10 cents, something like that. And then overall, just the plan is if we shoot back up to 670 during the weeks at some point this week, then I'll roll back up to the October 690s or something along those lines, and just roll out and up for the time being. If we stay the same, then you can for darn sure bet I'm going to be selling a lot more premium on this thing next week. And if we continue to go down, I will continue to roll the calls down, enjoying the fact that we're hedged every step of the way with the puts.
This is a shame that those I call them mini apples, but they're really just the mini contracts. I think they were approved, but they haven't. Of course, it's going to take a while to get them worked into the system. It's a shame they're not ready to go right now, because this is an environment where I'm sure a lot of retail would love to be jumping into Apple ahead of earnings at some reasonably elevated vol levels compared to what we've seen recently in Apple. So there's a lot of attractive elements right now, but still a lot of the retail people on the sideline, unless you want to trade one lots, or even sometimes they can't even do that. So it's an interesting one, but I think still a sidelines name for a lot of our listeners, at least until one of those 1/10 size contracts. I know, John, we talked last show about them getting in front of the SEC. Have you guys made any progress on when you think you'll be able to roll those out?
Yeah, we're still waiting on the exchange to notify us when they're actually going to release them. But the last update we had was 45 to 90 days, which puts it by close to the end of the year.
What are they going to call them? The crab apples?
No, they're actually going to put an 8 on the end of the symbol. We're probably not going to use that because it just
please don't do that.
just adds to the confusion.
That makes no sense.
Yeah, you want to hear a readback when it's got a non-standard mini option weekly? I mean, come on, it's getting kind of ridiculous. But so we're going to try to make it a little bit easier for people. I just designate that it's a mini option, kind of simplify things. But it's looking like the end of December.
At least do 10 or something that makes some modicum of sense. 8. I mean, you really have to do some intuitive leaps to get to that.
Yeah, I don't see the reasoning behind that one. Probably just an arbitrary number that they came up with.
Good old OCC, friend of the retail trader in that sense.
I did want to ask Tusa, though, what's his strike selection when he rolls down those 690s? What is he looking to roll into?
Well, with that, what I did was I wanted to see if we could get some type of an even money roll on it going into the weeklies. And we did. It was within like 10 cents. So it was close enough to an even money roll. So for the time being, the concept is if it stays the same, we're obviously better off than what we were had we just stayed in the 690s come Friday at the close. If it does continue to go down, it's about the same anyway. And if it does go up to 670, then it's a good problem to have.
It is a good problem to have. That's correct, Mike. I like your style.
Yes, I'm sure the clients who've been riding Apple higher all this time, not exactly picking up the phone to berate you right now.
This is America. Apple goes up. Isn't that what they say, Mike?
Every one of them wants to. Every one of them was very Apple bullish, so it's getting me real nervous.
Yeah, that's the whole thing. It's so loved that if it's not going to take a lot for a couple of big boys really get off the train, and we could see a lot of the retail audience take it in the chin, and that scares me.
Speaking of taking it in the chin and moving to the upside, and when, for the love of God, are you going to get out? Groupon seeing some love over the past couple of days. It's a Grigus core holding now, as we've discovered. Much of his family's retirement and educational needs locked into Groupon. Apparently, you're still happy here. Smooth sailing, up 22 cents, or about 4.5% today to 5.47. We seem to have some divergent opinions on the old panel here about Groupon.
I'm not sure what it's going to take to get you guys into this, but I mean, I'm trying to put food on the table for your kids, trying to make your wives happy, take them out to dinner. Up 11% on Friday, another 4.25% today. I mean, this is just the beginning of a rally that's probably going to, last through the end of this week.
Keeping it local, too, supporting the old local economy, supporting Chicago's own Groupon. I know, Sebastian.
You guys know any people that work for Groupon?
Fortunately or perhaps unfortunately, no.
They are the most miserable people. They're all scared they're all going to get fired. They all are like, the end is near. It's really funny to listen to them. They're just despondent.
Aren't about 90% of them sales guys for the most part? That's like the bulk of their workforce, is it not?
Yeah, and Groupon's trying to automatize all of that. So, good luck.
Or automate. Or automatize. I like that word, too.
Automatize is the proper term for automating a Groupon.
Yes.
All right?
Indeed.
Now, you automate anything else, that's automating. But you automatize a Groupon.
Speaking of automatizing, we were able to automatize the other side of your put spread you were looking to put on in Groupon?
The 1x2, yeah. That's a nice little trade. I just think that, I don't like Groupon, and it's hard to borrow, and it's on a nice little rally, so I'm legging into a Jan put 1x2 here with the expectations that I'm going to make a lot of money back.
So Groupon heading well south or well north, depending on which of the all-star panelists you talk to today. I've washed my hands of Groupon for the near term, but yeah, I'm definitely not. I'm not riding the love train right now. Let me just say that on the Groupon side of the fence. So I hear technical school is very good as well, John. So I wouldn't be too worried about that. Or community college.
Well, Lincoln Tech is great. Your daughter will do really well as an auto mechanic.
University of Phoenix doing great things these days.
Yeah, you got ITT. You just name it. Your daughter will have every choice of publicly traded up higher education.
All right, perhaps on that note, we will close out the old trading block and dive right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and welcome to the old odd block, and we're going to kick it off today with a massive, just ridiculously enormous roll here out in CNX, Consol Energy, ticker symbol, like I said, CNX, and they closed today $31.73, up about 38 cents, but that's not where the action was. The action was on the options side. This is the name that does about 11,000 contracts a day. This is a producer of coal and natural gas for the global energy and raw material markets, but today they did nearly 300,000 contracts. This is just a ridiculously sizable roll, and we saw all the action on the put side, over 130x ADV on the puts alone. We saw almost 240,000 contracts going up, the bulk of those in January on the put side, where we saw the Jan 29 puts. First off, they were sold to close about 85,000 times, 11 contracts shy of 85,000 contracts, sold to close for $1.71. At the same time, this trader opened up on the 31.25 put spread for 82,000 times, again for a net debit of 173. So he actually did this fairly premium neutral roll here from the 29s up to the 31.25 put spread. Clearly, like we said, a massive roll. Probably could be an underlying holder. Of course, it's relatively near term for an underlying holder, and the stock here hasn't exactly had a massive movement to one direction where you would see someone looking to adjust their roll position. It's kind of been vacillating between the 28 and 34 handles for the better part of the past year or so, with a extended segue down into the mid-20s for a little bit. So I suppose if you're looking at that earlier trading back in June when it was trading in the mid-20s, this could be this 31, 32 level could be a level you want to lock in. But just massive size in a name that otherwise really doesn't do any other activity to speak of. So just so enormous, it just personifies the unusual that we're talking about today. Again, from an intent-wise, probably an underlying guy looking to hedge, perhaps a massive someone else. I doubt it's a naked outright spec here, but just a massive put spread here. Any of you guys watch this going up, or any calls coming in on this today, John, because it was just so ridiculously out of the norm?
We didn't get any calls on the desk, but CNX is a popular retail security to trade options on. We do get a lot of calls on it, but nothing of this size. This is a pretty large three-way, and I'm a big fan of those.
Says the man who reviews strip clubs on Yelp.
Says Seabass.
Hey,
Actually, that's
how
right.
dare you? We all review strip clubs on Yelp.
Yes, it's all of our hobbies.
How are you supposed to know what strip club to go to if you don't?
Because otherwise you might go to a dirty one.
And if you wear tennis shoes or not. I mean, come on, that's
important to know.
Which strip club brunch is the best?
Yeah, or brunch. Yeah, for sure. Who serves the best coffee?
Can I just say, I've never understood that concept on a complete aside of who actually eats in a strip club. Is there a more disgusting environment that you want to eat food in? That's just unbelievable.
Oh, let me tell you.
Don't knock it till you tried it.
There's nothing worse than egg, sausage, and bread and naked girls. What's wrong with you? It's the best.
There we go, listeners. Spoken like a true connoisseur of egg, sausage, and naked girls. Let's move on to, we have Vringo, ticker symbol VRNG. This one closed up about 20% today to $5.43. This is a development stage company that engages, that makes software for mobile phones, also a mobile phone platform for things like ringtones and all sorts of fun stuff like that. This stock has been moving quite a bit of late off of some favorable moves by the U.S. Patent Office. A lot of patent stuff, and we won't dive into that. If you've been following the tech space at all over the past year, you know the entire story has been essentially patents and patent wars. We won't dive into the minutiae of that, but suffice it to say, this one's been looking pretty favorable for Vringo, which was trading just south of $3, actually, just a couple of days ago. It's more than doubled now since these patent developments first came to light. And not surprisingly, someone with some underlying, probably looking to protect himself and collar and write off some upside at the same time. Picking up a sizable collar. Actually, before we even do that, this is a name that does about 11,000 contracts a day, and they did nearly 70,000 today. And I think that 11,000 is even essentially elevated over some of the activity we saw over the past few days. This is not a name that typically puts up 11,000 contracts a day. But what we saw today was 15,000, over 15,000, I should say, of the Nove 4.5 bearish risk reversal lighting up the tape for about 5 cents here. There's way more volume than open interest on these strikes. This is all new, and looks like they bought the 4 put, sold the 5.5 call. I believe they collected a nickel. I could be wrong, could be a debit on that. But essentially this is an underlying holder seeing the way this run has moved, saying he's happy letting the stock go at 5.5 here, and also wants to lock in some of his downside. Given the exaggerated level of the movement here, I can't really blame this guy, and everyone knows what a fan I am of risk reversals on this name. So an interesting trade here. Of course, not surprisingly, given the fact the stock has pretty much doubled in a couple of days, we're seeing vol levels well over 200% on some of these at the money strikes here. So it's crazy stuff going on in Vringo. We'll keep an eye on this one. This is through November, so this guy bought himself some time. But,
I guess the story is there's big patent lawsuit with Google, and the question is Google going to buy them, or is Google just going to pay them a fee, and kind of what's the story there? And that's why there's so many different, that's kind of, and whether or will Google win. And so everybody's kind of trying to figure out what's going on. Let's just put it that way.
That's interesting with a name this small and a company this small versus a massive name like Google. Enforcing your patent rights could easily lead to just an acquisition. It's cheaper. It's cheaper than fighting and dragging this thing out for all this time in the courts, particularly if you're going to lose. It's hard to keep track of all the patent bingo going on in tech land these days. But still, interesting stuff going on. A lot of upside love and a lot of course, just crazy activity. We'll keep an eye on VRNG. Before we wrap it up, John, anybody calling up about this one today?
No, it's been pretty quiet on VRNG. I mean, you said that they usually trade 11K average option volume.
I think even that sounds kind of inflated for this name, but yeah.
Yeah, right. Probably about half that normally. No, we haven't had anybody even calling on it. Long stock. Usually when you see something pop like this, we get a lot of short sellers coming in and try to see if we can, short this stock. But even haven't got that interest as well.
All right, and that's going to do it for the old odd block. And now we're going to dive right into the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, welcome to the Old Express Block. This is where the man from Cornland, a.k.a. Mr. Johnny G, takes the microphone, and I get to relax a bit. So, Mr. G, what is lighting up your personal tape over at OX these days?
Well, I know we're going to have Price Headley from Big Trends on the show today in the interview block, the long-anticipated return. Price Headley does have his newsletter, Big Trends, on the Options Express Execute service, which is our automated online trading feature that we offer through the Options Express website. We get a lot of people that want to begin trading options. Maybe they don't have the time or the energy to put in to learn about options. Maybe they'll go over to Mark over at the Option Pit or KYO with Tucson to kind of have somebody manage it, or they might have somebody do a newsletter and publisher service. Big Trends is one of our ones that we do offer. We got about 8 of them out there on the website right now. If you are interested in that, just head into the account, go to account, and hit on Execute. You'll see the drop-down menu with the different investment publishers that we do have. We don't make recommendations or validate any of their claims. We are simply an agency in the execution of these orders. What does happen, though, is that once we verify that you are signed up for their newsletter, when they put out a recommendation, you have a preset allocation depending on dollar amount or trade amount or contracts that you want to do per recommendation. That recommendation comes out, our execute desk receives it, and they put out the trade and automate it, and it kind of shows up in the account whether we can get it filled or not. But it's all automated, so we like to kind of push that out there if people are interested in Price Headley interviewing the Big Trends. On the other side of the tape, we have something that happened last week that I wanted to bring up and get everyone's input on. It's Sears Holdings. About a year ago, Sears Holdings did a spin-off on Old Orchard department stores, which was really a big problem for us on the desk because in this instance, what they did was that they spun off. It was either the rights or it was a stock, but the stock hadn't started trading yet. And we were about 4 days before expiration, and we had people with sizable positions in Sears, and mostly premium sellers because it's such a hard to borrow stock. But the market makers ceased making markets on these Sears options because they could not price a component of the deliverable that was yet to begin trading. And pretty much they were frozen. I think the only exchange or the only people out there who were making markets were retail, and I think it was on the Philex where they were allowing retail clients to show their bid and offers, but we're talking $4 or $5 wide markets. And really, the only people out there that were trading it didn't know any better. Well, last week they did something similar. Sears had a spinoff, I believe it was on September 12th, for rights to the Sears hometown and outlet stores. Okay, and they had a similar situation where we had some retail clients that were short calls get assigned similar to like an ex-dividend date, where we had talked about the SPYs and the liability that those clients had that were assigned going into ex-dividend date. We had a couple accounts that were long some vertical call spreads. They did get assigned. The component delivered not only the shares of Sears that they ended up being short, but it also delivered the rights, which isn't usually a problem. You say, hey, I'm long the calls over here. Just go ahead and exercise it, which we did. The long exercise of those calls took care of the short stock position, but the rights that stopped trading on that day of that ex-dividend date, so they did not offset the short rights position. I know, pretty confusing. Just ask questions if you get lost here. So the solution was, okay, well, he's going to have to deliver the shares of the short right position, so we'll just go ahead and exercise these rights. But the rights did not settle before we could tender those rights. So pretty much the guy was going to be short stock after the tender went through, and he was going to be liable for any movement in the stock before he got the shares in his account. And we don't know if those shares are going to start trading today, tomorrow, or when, if ever, they're going to start trading, because I know Sears is known for not being prompt on these spinoffs and when they do trade. So my point is that people that are trading Sears options should watch out, because they're going to continue to spin off. I got to imagine Craftsman is going to be a component. Kmart will be a component until there's really nothing left of Sears Holdings. And if they do go non-standard, we can't give you advisement. We can't tell you what to do, but you're better off rolling into the standard option, because if you're not familiar with what the new deliverables are, you're going to end up in a situation where it's going to cost you money.
Somehow I'm guessing the folks at Schwab may not like hearing their guys on the trading desk say that. But it's interesting. I don't know who's underwriting or who's putting these offers together and these spinoffs, but it's like they almost have it out for anyone who holds the stock and who trades the options. It's like, let's construct these in the most obtuse way possible in order to just confound anyone possibly involved with this deal.
Yeah, it's like they're literally just doing it to, I don't know what, and this. When companies do spin-offs, when they do rights offering, when they do tenders, I really don't think they think about the derivatives market, the options market at all. It goes out there, and it really makes things difficult for the retail client at a time and environment where there's confidence is needed. And these spin-offs really end up hurting the retail client, and Sears is one that's going to continue to do this. And so, just gonna say buyer beware. Stay away.
Sears just kind of slowly taking apart all of Sears.
It's exactly what they're doing. Yep.
Yeah.
Yeah, I mean, they've done it 2 or 3 times already. There's still a couple more components of Sears Holding. They're probably going to continue to do it.
Here's a question. Are they going to spin off Sears from Sears Holding?
I wouldn't doubt it. Yeah, I would say that they probably would.
So then what would Sears Holding be?
It'd be the rest of Kmart and their land and any other.
Yeah, it would be all the losses lumped in right there. The remnants of perhaps the worst real estate play ever in the history of time.
It'd be like General Motors Holdings. That was just the bad debt, that they ended up just foreclosing on.
I knew several people who were involved with Sears recently, and they were just who worked there, and it just amazing the stories you hear come out of that company about how just completely incompetent they are in anything having to do with the retail spectrum. It's probably because they were bought by a hedge fund guy, and then they had put a bunch of hedge fund people in charge of it when they're trying to run a retail, essentially hardware empire. Interesting thing to do. Like I said, they bought it for that they bought it for that real estate play, and it was just probably some of the worst timing. Probably equal there to Soros buying into tech in March of 2000. Just very, very poor timing.
Didn't Soros buy GM, or who was that?
That was Kerkorian or something, wasn't it?
Yeah, it was Jack Kerkorian, you're right.
But yes, very, very poorly timed real estate play, and he's trying to make some of that back now, but it's probably too little too late on this one. Sears just a shell of what it used to be, in this case, actually literally. Anything else going on over there in OX land, Mr. Grigus?
No, other than that, we're doing a little bit of cleanup from the reverse splits of last week. I had a lot of clients upset that VXX was once again splitting, and I have a candid conversation with them, like, how did you not see this coming? Look at a weekly chart. I mean, reverse-wise, the high in the stock is like $850. I mean, that's what it does. It should be in its prospectus. Every 6.5 months, we're going to do a reverse split.
We've been talking about this for weeks on this show.
Need more listeners to listen up, then, because there were some people that were just they felt they were robbed, and so I was more than happy enough to give them the phone number over to iPath. So hey, take it up with them.
Speaking of splits and reverse splits, I was talking about this with someone at a conference, a bunch of conferences in town last week, and one of the topics we got on was Apple, and if it was split, how quickly it would retrace back to these levels. What do you guys think would happen if Apple just pulled in this case, maybe a 1 for 6 or a 1 for 7, got down to the 100 level or so price range again? How quickly would this thing light up the tape?
I don't know. It'd be interesting.
I think you'd see something similar to what Baidu did when it had its reverse split. I think it reverse split when it was around $800 or $900, and maybe had a high of $140 after that. So it almost doubled.
Yeah, I'd like to see that happen. That would be my official top once Apple does that.
I would not be surprised if it did that, to see it get close to these levels again before it finally topped out, as the zealots were like, oh my God, I can afford it. It's so cheap. Probably not even realizing that it has reverse split for a lot of people. Yeah, that'd be an interesting one. There's a fun talking point, something I thought be good to mull over on the show. Speaking of mulling over, it's time to close out the old Xpress Block and dive right into our long-awaited, much-anticipated return of the interview block.
The Interview Block.
All right, and welcome to the Interview Block. I know it seems like it's been a while, and indeed it has been quite a while since we brought a guest onto the old option block. It seems like we barely have room these times in an hour to cover everything that all the panelists want to say. But once in a while, we like to mix it up and bring on a guest to bring on some different perspectives onto the old option block. And today's guest/victim is Price Headley. He is the founder of BigTrends.com. Price, welcome to the program.
Thanks, Mark. It's great to be here.
Now, for some of our listeners who may not be familiar with Big Trends, why don't you give them a quick summary of what you guys do over there?
Sure. I started Big Trends back in 1999, and we started off mainly focusing on real-time trade alerts for option traders, everything from day trades out to swing and position trades. And now I've added over the last probably 7 or 8 years a lot more options education pieces because people are just hungry for more knowledge about how to trade all different types of strategies. So we have DVDs, coaching programs, daily emails that go out to folks for free on the daily emails. They're really popular. My daily trend watch and weekly outlook and all that good stuff. So just a constant education process. Especially with options, there's so many different ways to trade them, so many ways to make money, and if you don't know what you're doing, so many ways to lose money. So it's important to get educated first. So we put a lot of emphasis on education at Big Trends.
Is options the primary focus, or equity technical analysis, or kind of maybe a mix of all of the above?
Yeah, it's interesting you ask that because it is a blend. I mean, we definitely are of the camp that believe that if you get the underlying right, it makes your job a lot easier as an options trader compared to, trying to just focus on, say, volatility scans and selling high implieds. Might not be such a good idea if you've got an FDA event or some other big news coming out the next morning. So, we're big believers kind of, really getting the underlying market right, sectors right, stocks right. And so we teach technicals, a lot of unique indicators. I developed an indicator called acceleration bands. That was how I actually started the company. I'd done real well on that in the late 90s and managed to, cash that in and go on and, like the E-Trade commercial, leave the job and actually hang on to the money and keep growing the business in this volatile period over the lost decade of the 2000s.
It's interesting you say in the terms of the lost decade, Price. What are some things that you're seeing in the market right now with what's going on in Europe? What are some things that are maybe tickling your fancy in the market these days?
Yeah, Mike. There's so much going on. Because the reality is most common investors, that are just buy and hold investors view it as a lost decade. But obviously for traders or even for intermediate term investors, it's still very viable on the upside and the downside. We've viewed a lot of this negativity out of Europe, the negativity out of what's going on with the banks, with the worries about the presidential election. It's kind of created this undercurrent wall of worry that's actually been really healthy for the market continuing to advance. Probably finally got a taste of some news that didn't do as well for the market on Friday with the jobs data. Obviously, feels very manufactured, conveniently right in front of an election to see the unemployment rate plummet from 8.1% to 7.8%. I think we would say what's the market reaction is really what matters. And of course, after an initial rally attempt, the market failed and basically sold off on that news all day on Friday and kind of continued that today. So our view is that we're going through a little short-term consolidation. But I think when you look at seasonal trends, which are big on looking at all different kinds of patterns, not just technical price patterns, but seasonally in presidential election years going back to 1900, that has worked really well this year. And the seasonal bottom is usually the week that we're now moving into, the second week of October, is usually the low point for stocks. It's actually a little bit earlier than the usual seasonal low point in later October. So we're fairly constructive to buy dips into this market and bet that you're probably going to be rewarded come the end of the year with the market rallies, kind of regardless of who wins the election. No matter what your political leanings, the market is biased for a rally both before and after the election from here.
Now, Price, I know you're talking on the old Know Your Options webinar train tomorrow about iron condors. So why don't we get a little bit into that then, about why you're such a fan of iron condors? Is it because there's such a risk-mitigated strategy? And also, you mentioned how, the kind of environment we're in right now. Are you coming and telling your students and your clients that they should be buying iron condors, writing? Is it kind of a mix-and-match approach depending on the environment, on the underlying? What are you counseling your users right now?
Yeah, I mean, it really does tend to depend on the environment that we're in. We tend to be biased towards defining environments when they're not strongly trending, where we can actually sell premium on both sides of the market and basically benefit from some of this chop, kind of like what we're expecting, say, over the next week, that while we may go through a bottoming process, we kind of had an event on Friday that sort of didn't have that catalyst to the upside. Now, of course, we're in earnings season this week, so you've got Alcoa tomorrow, and we'll see what the tone of that is for going forward. You would have thought Alcoa, who cares, in the past, but actually, they reported a better than expected outlook last time. Actually, that was kind of a catalyst for a positive start to an earnings cycle that led to that strong run in August and even September. But, my view is that, we're generally going to be more sellers of that particular strategy on the iron condor, looking to collect premium. And then what you got to worry about is if VIX and volatility gets too low, then you've got to be careful about not selling options that are too cheap. We really like to sell the weekly options, which of course have 7 days of trading days or less of life left before their expiration. Like to get them done before the weekend, so you get kind of that initial cushion in front of the weekend. Start to let time be on your side for those real short-term out of the monies on both sides. But you got to be careful there, because they were getting far too cheap here a couple weeks ago, and of course that can turn on you real quickly if you sell options too cheaply, and then get yourself in a position where you're not getting compensated enough for the risk of a straight up or straight down move. I mean, you don't mind to have day-to-day volatility with the iron condor selling strategy, but you want to make sure that it's non-directional. Right? You want to make sure that it's not just going straight up. We got, frankly, we've been very consistent with that strategy. We got roasted by Bernanke when he came up with QE Infinity a few weeks ago, and that really caught everybody, including us, by surprise, because the market just basically went straight up without looking back, and that made us have to take a loss on that particular week's strategy. But that'll happen every once in a while. Our goal on that strategy is to be right about 8 out of 10 times or more. So if we find that, especially with retail traders, it's hard for any trader to trade another guru's or other person's system unless it has a very high win rate, in our experience. That most option traders can't stick with something that's got a 40% win rate, that somebody else is making trades and telling you to buy this or sell that, and then if they're only winning on 4 out of 10, even 5 out of 10, people aren't probably going to stick with that for the long haul. So we wanted to develop something that had that much higher win percentage expectation, and then the key is just making sure you don't step in front of a freight train that 2 out of 10 times, that you manage your way out of those trades and don't get hurt too much when it is a straight up or straight down kind of a move.
Yeah, I think that makes a lot of sense, just because of the fact that, especially I imagine you attract a lot of beginner style traders, and then if all of a sudden, even if the overall strategy is positive, even if it's a winning strategy, it's hard for a beginning trader to stomach being wrong 6 out of 10 times and having to have the faith that maybe you're wrong more times than not on trades 1 through 7, but having the faith that trades 8, 9, and 10 are going to be right for you.
Exactly, Mike. I mean, the thing is I've got a lot of very profitable systems that are, one of them's right only 30% of the time, but it makes a lot of money, because when it's right, it's really right, and it stops out really quickly. So, of course, if you keep really tight stops, you're going to hurt your winning percentage, but that is to cut your losses quickly while letting your winners run. Most traders, especially like you mentioned, Mike, the beginners, are doing the exact opposite, which they're wondering, gee, why am I not having success? I'm booking all these little quick winners, but then when I lose, I'm losing big. Well, that's going to be a real problem, because it's the guys who've been in the game for decades, whether the hedge fund players or other professional or even retail traders, have learned how to cut their risks down quickly when they're wrong, never add to the loser. Just the classic trading motto is that, psychologically it's hard to do, because adding to a loser, for example, that's your ego getting involved and saying, gee, I want to lessen this ego pain that I'm feeling of being on the wrong side of this trade, so let me average down and therefore not feel as bad. But that's just throwing good money after bad, and we don't want to do that. So, but it's teaching traders those lessons, both the actual psychological elements there, as well as just the kind of rubber meets the road, real world application as well. So it really is something where, especially for beginners, they think, well, gee, I've done well trading stocks, this should be easy to move over to options. And we all know that options, it's a whole nother couple of dimensions when you add in the time component and the volatility, constantly changing volatility expectations. Really does make it important to understand how those options are priced and whether you're a beneficiary of those expectations, or maybe that you're kind of jumping in on those expectations when volatilities are too low and thinking they're going to stay low. And everything goes in cycles. We even had a little pop in volatility here a couple weeks ago. It didn't last very long, but it was enough to kind of breathe some fresh life into making the Iron Condor selling strategy a good strategy again, after kind of just frankly VIX getting too cheap and volatility being too low. If it's too low, you just don't want to sell it. It's like raising expectations on a high bar jumper to a level where even the Olympic high jumpers are not going to clear a bar if you raise it too high on them. So our view is that it's all about expectations. And speaking of expectations, the earnings right now, coming in, that people are talking about the worst earnings outlook for this quarter in 4 years. And so a lot of built up negative expectations, which I think is actually really healthy for some positive surprises. We know that they're going to look bad, but the question always is, what does the market do after the news comes out? The news is a catalyst, but the most important thing to us is how does the market react to the news? That'll tell you if people have already kind of sold out in front of that, expecting things were going to be bad, and now they have to rebuy in later and push prices higher if the expectations are too low.
Yeah, I think that's a good point. And then just to kind of add to that, what you were saying earlier about you want to make sure that the potential reward is there for the risk that's involved. Like if the VIX went to zero, theoretically, there would be no possible way you could sell an Iron Condor on any index. But with that in mind, what levels would be too low for you? Or like, what are some of the things that you look for to where you just throw your hands in the air and say, we're not doing the Condor this week, folks? Or is there any point to where you'd go to that?
Yeah, absolutely. I mean, you have to have points at which you're willing not to trade, because you shouldn't be, in my view, you shouldn't be in the market all the time, especially if the cards are not stacked in your favor. Our view is that it's not an absolute level on VIX or VXX or any of the volatility measures, but it's actually a relative level, looking at factors like Bollinger Bands, my acceleration bands, tools that kind of show us a relative scale. Are we at the lower end of those bands where volatility is likely too low? Are we snapping back up to the midpoint to upper end of those bands where it makes more sense to be a net seller or premium? So that's really where we look at is okay, what's the overall kind of relative scale look like? And so that gives us sort of if you think of it as 0 to 100 percentile range, it's kind of like, well, where do you think the probabilities are in your favor? And the key there is just making sure that you don't step in front of. There's times where volatility looks too rich and very worth selling, but like if you're in the fall of 2008 and you're going through a massive downtrending market, you have to factor what's happening with the underlying stock trend or market trend as well. So, there's been lots of times where we stepped away just because volatility is rising, but it was too fast of a declining market. So we'll use our technical analysis to tell us, okay, let's not try to catch a falling knife. Let's go ahead and let that flush out and then let it stabilize. So there's a lot going on there, not just in analyzing one element. And I think that's what makes options trading so challenging for most newer traders coming in, is they just don't recognize how many different elements you have to assimilate to really understand, where the risk is worth taking or where it's not worth taking.
Now, Price, and we have to wrap up here soon. I know you have to run as well. So why don't we give our listeners then a little quick preview of the webinar tomorrow night over at Know Your Options Inc. and what you're going to be hitting on, and give us a little taste to wet their whistles until tomorrow night.
Yeah, we're going to definitely go into these elements, not just about how Iron Condors are structured, how we like to set them up to sell, high probability trades, but also really going into, okay, what is at least a basic technical analysis method you can use to simply understand what the nature of the trend is, not just on one time frame, but actually across multiple time frames. So it's sort of like you see what's going on in the bigger picture charts, but then you put like a microscope and you literally zoom in to what's going on the intraday charts, and there's a lot more confidence you can generate when you're doing that kind of multiple time frame analysis. So it's going to be kind of a nice synthesis of not just talking about the iron condor as an option strategy, but also when it's appropriate based on the technical condition of the market and how we would adjust trades based on, okay, when we're in and then something changes, how you would manage gap risk, event risk, elements like that. What's the right time to put them on? When should you buy it back, or when should you let it wait till the expiration to maximize your premium? So we'll talk about all those factors, both from the trade management side with the technicals, and then of course from a strategy management side with the iron condor strategy itself.
All right, great, Price. Thank you for coming on the show today and kicking off our new segments of interviews, of the interview block here. We haven't done these in a while, so it's kind of fun to bring them back on the old show. And listeners, by all means, tomorrow when you listen to this show, by all means, surf on over to Know Your Options Inc. and register for the webinar. There you can hear more from Price and the guys over at KYO talking about iron condors and all the different fun adjustments that go into trading that strategy. So thanks again, Price, and we'll have to bring you on the show again down the road.
Look forward to it. Thank you, Mark.
Thank you. All right, and that's going to do it for the interview block, and now we're going to dive right into Around the Block.
Around the Block.
And welcome to Around the Block. This is, of course, the portion of the show where we talk about what we're looking at for the rest of the week. And as Price mentioned in the interview block, it is indeed the return of earnings season as well. Alcoa kicking it off tomorrow, and then we are once again back off to the races. And this is, of course, our favorite time here on this show because it gives us something meaty and fun to prognosticate about and trade options around, as opposed to just the ethereal will they, won't they going on out there in Europe, which is pretty much anyone's guess at this point. This earnings a little bit more tangible, a little bit more something for us to sink our teeth into here. So Alcoa, and of course, as they said in the interview block, a lot of people are weighing in. This might be a very, very poor earnings season all around, and of course, if that's the prevailing mindset, then we are perhaps poised for some interesting upside pops if something does move that way. Of course, probably the chief customer in that, the chief one everyone's looking at, of course, would be Apple if it can pop back up. Uncle Mike, do you think we're going to get our traditional rally back to the upside ahead of earnings here, or is Apple kind of going to languish here?
Apple's going to go up. That's all.
So 640, that pretty much is your level? 640.
Apple's going to go
two
up.
Handles. All right. Well, aside from the Apple madness, what do you have your eyes on these days?
Well, and obviously I say that kind of facetiously. I'm watching this weekly call into the end of the week. What I think's what I'm excited to see coming up this week on the 11th, we have the vice presidential debate, and what I'd encourage people to do, just as what I did during the presidential debate last week, was just watch the futures market as the debate's going on. It's interesting to see how the trading goes, to see if the market likes who's winning or who's losing. And I'm definitely going to be watching the vice presidential debate and curious to see how Ryan stands up against Biden. Did you guys hear that Romney picked Biden as his running mate? Or was that that they were talking about, that they were messing with people? And
yeah, that was fun. That was Howard Stern. That was funny.
That was good. But anyway, the vice presidential debate is what I'm going to be taking a look at this week, amongst everything else with earnings and what everyone else is looking at. But definitely excited to see the big debate coming up.
You think the VPs are going to be market movers?
We will see. I didn't think the Ps were going to be market movers.
Well, let's not forget that George Bush's running mate Dan Quayle got absolutely pasted by Lloyd Benson, and it had zero bearing.
What did he say, Sebastian? He said, I know Jack Kennedy. And
Jack Kennedy was a friend of mine.
And you are no Jack Kennedy.
Nice.
Yeah, but I think everyone post Cheney has a little bit of different idea too about what the VP possibly could do if you do have a strong VP. And they're not saying that Ryan or Biden are going to be those, because Biden's already been VP for 4 years. But it's still, I think maybe post Cheney we have a little bit different idea of the VP as kind of just an empty suit hanging around waiting for something to happen to the president. He actually could do something if he was mildly competent, or just very aggressive or ambitious, or maybe a combination of all three. But yes, interesting stuff. We'll keep an eye on the old VP debate. Aside from the raging political scene, Mr. Sebastian, what are you watching for the rest of the week here?
Alcoa, Apple. It's a slow week, and I think that's gonna. I think we're gonna if we're gonna have an off week during the month of October, this is gonna be it. Don't be surprised if we kind of have a slow grind down, but that's it. I just think it's gonna be a really unexciting week.
All right, Mr. Grigus, what are you watching? Are you paying a keen eye to the VP debates as well?
I'm probably going to skip those if there are any, any indication of how the first presidential debates went. I think, the vice president one's going to be a pass. But we have PPI at the end of the week. I know Price Headley mentioned QE Infinity in his interview earlier in the segment or in the show. So I'd like to keep an eye on PPI, see if inflation's starting to creep into the buying power of Americans. Also have Schwab's earnings next Monday, the 15th. I want to see if all my hard work paid off last quarter.
The Grigus bump over there in Schwabland. You guys also have your big Impact show coming up in Chicago in about a month or so, right?
We have a client loyalty show coming up, We have a client loyalty program coming up at the end of the month where we do the SIBO and CBOT. We do a walk-on down there and take these clients out to dinner. But I'm not familiar with what.
Oh, I'm thinking the big Schwab show. The Schwab has an Impact show that they're planning in Chicago next month.
Not aware of it, but I'll find out about it and get some info for you.
Yeah, all right. And that will do it for the old Around the Block segment. That'll also do it for this episode of the Option Block. Of course, we want to thank Price for joining us here on the return of the interview block. Look forward to many more exciting interviews in the coming weeks over here on the Option Block. And before we go, what is coming up with our respective panelists that may interest and or intrigue you, the listener, starting off with you, Mark Sebastian from OptionPit.com.
I got a couple of webinars this week. That's about it. And I'll be on Bloomberg TV probably when you're seeing this.
That's what that face is staring at me from my television right now. I thought it was just a horrible figment from my nightmares, sir, but it was just you. Okay.
There you go.
All right, thank you for that, Mark. And Mr. Tusaw, I think you have some exciting webinars coming up, so what's next up? Obviously, Price Headley up tomorrow or today when our listeners are listening to this, and then what's up next on the old KYO webinar train?
Yeah, next week we just secured Kevin Davitt. He is a futures broker from works in our office, and we're excited to have him. And he's going to be talking to us about futures trading in general. He's going to be talking about futures options, on how they can kind of work in similar ways as stock options as well, and just how he works them, and various ways with which he does ratios, and just kind of to be the bridge that we need and more of, in my opinion, in terms of educating retail option traders that futures options are kind of the same thing, but different, but yet the same, but just a little different.
Just a little bit different. If you want to learn more about futures options, of course, I encourage you to listen to our long and short of futures options program that we do with the folks over there at the CME. It's a little bit more of a 10,000-foot perspective program than a retail education program, but it does give you a good overview of the futures options markets and how they work. And of course, last but certainly not least, Mr. Grigus, what is coming up in the land of OX/Swab?
We have our 3 live events coming up, one in New York on October 13th. We have 2 new shows, one added for December 8th in Boca Raton, and on November 10th, it's nice that they put them in order on the website, we have a live event in Denver.
I guess there are worse places to be than Boca in December.
Yeah, right. I think somehow our education department was picking those choices.
When's the next big Orlando show? I know you guys like to take over the Swan and Dolphin down there and make the big Disney Mickey OX show. Any of those coming up?
I'm hearing it's going to be in mid-January as of right now. They're just trying to secure a hotel.
Sounds good. Good to know that there's a good options audience down there in the house of the mouse. All right.
Yeah, you got Mickey, Pluto.
Yeah, they love it. They love writing covered calls. That Pluto, though, he's kind of a bit of a degenerate premium seller. I've had to walk him back from the abyss a few times. That guy will do nothing but hit bids all day if you let him loose on your screen.
Oh, why do you got to dog him?
That was, with that unfortunate note, I think we'll close out the show for today. But, of course, we want to thank all of you out there for downloading and streaming and subscribing to the show and making us such a success. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.